So we were always on the gold standard. All the Federal Reserve notes were redeemable in lawful money, gold. But in order to issue the Federal Reserve note, they had to be 100% back by another form of commercial paper, a note from another bank, and 40% gold. High quality notes. What is the Federal Reserve note backed by now? Nothing. It's got lower quality than any of the notes that were in circulation prior to 1913. So instead of a superior note, it's a lousy note. More reckless money printing, quantitative easing, artificially low interest rates. That's it. That's what we're going to get. And that's bearish for the dollar. That's bullish for gold. That's bullish for the Euro-Pacific asset management strategy.
The real issue, according to Peter Schiff, is not just inflation or interest rates. It is the quality of money itself. He explains that the United States once operated under a system where paper notes were tied to lawful money and backed by real value, including gold. In his view, that older system imposed discipline, while today's currency structure allows far more reckless expansion with little meaningful restraint. Peter Schiff says the Federal Reserve note is weaker than earlier money. Instead of real backing, the system relies on money printing, artificial stimulus, and manipulated interest rates. This, he argues, creates pressure on the dollar and builds the case for gold. He is clear, more easing and intervention benefit gold and hurt paper money over time. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The Federal Reserve Act was passed in 1913. So prior to 1913, there was no Federal Reserve. Now, it wasn't that there were no central banks. There actually were. The Federal Reserve is not even the first central bank we had. It's the third. And it should have been three strikes, you're out, because this is the worst of the three. And it's also been around the longest, which is the biggest problem. This central bank has been around for more than 100 years. The first two only lasted about 20 years each. Unfortunately, the Fed has been around for more than 5 times as long. That's the problem. But the first central bank we had, I think, started around 1791-ish, something like that. I don't know, I think. And it lasted about 20 years. That's it. Then they chartered another one, the second bank. A lot more people are familiar with that one. That one lasted about 20 years, but that one was ended by Andrew Jackson. And that was the best thing that he did as president, was kill the second central bank of the United States. Then it was about 80 years between the second central bank and the Fed, the third central bank. And those were probably the best 80 years we had as a country. I mean, not counting the Civil War, right? So the Civil War was probably the worst 4 or 5 years we've had, right? We were having a war with each other, right? But after the Civil War ended, 1865, we didn't have a Fed. And we didn't have a Fed until 1913, just before the First World War. But for all those years, the country had no central bank at all. And that's when we had the greatest economy. Even Donald Trump talks about how great our economy was in the 1880s, 1890s, 1900. One of the reasons it was great was because we didn't have a central bank. We had sound money. We were on the gold standard. And we had the Industrial Revolution. We had this huge economic boom, the Gilded Age, all this great stuff. All the immigrants that were pouring into the country, they came in when there was no central bank. We would be better off without a central bank. Now, why, after 80 years of economic success, did they resurrect the central bank for the third time? Because the reasons that they gave have nothing to do with the Federal Reserve we got now. In fact, had somebody proposed back in 1913 the current Federal Reserve, it never would have been enacted. Nobody would have been dumb enough to buy it. So what was the goal of the Federal Reserve? Well, there was I think there were two or three main objectives. But one was to provide a superior bank currency. Because number one, the Federal Reserve was independent. It wasn't part of the government. It wasn't just independent like today. I'm just jumping ahead of myself. But Warsh said that, yes, the Fed is independent from government, but it's not independent of government or something like that, that it was part of the government. It's not supposed to be part of the government. That was the design. And what are the ways you know this? If you get a letter from the Federal Reserve, it's got a stamp on it. If you get a letter from any government agency, there are no stamps because they get it franked through the post office. See, if the government sends mail, they don't have to buy a stamp because they own the post office. So they just send it. But the Federal Reserve has to actually buy stamps from the government. Why? Because it's not part of the government. It's a private banking syndicate. And the reason it's private is because there's no constitutional authorization for it to be part of the government. Because if you read the Constitution, you don't even have to understand it. If you read it, the U.S. government is not authorized to print money, right? Issue bills of credit. That's paper money. The states are denied the power to do it, and the federal government is not authorized to do it. All the federal government is authorized to do is coin money. That's not the same as emit bills of credit. The states, the Constitution, Article 1, Section 10, says no state shall coin money or emit bills of credit. And the only thing Article 1, Section 8 lets the federal government do is coin money. They're not given the authority to emit bills of credit. And again, if you understand the Constitution, you read the 10th Amendment, the powers are denied to the states and given to the federal government. So the states can do anything that they're not prohibited from doing, and the federal government can only do those things that it is specifically authorized to do. And so the federal government is not authorized to coin money, so is not authorized to print money, so it can't do it. It can take money and put it into a coin. Well, what's money? Well, the only thing that can be money is gold and silver, because the Constitution says that no state shall make anything but gold and silver legal tender for payment of debt. And the federal government is not given the authority to make anything legal tender, so it doesn't have it. So it's set up an independent bank to do things that the U.S. government cannot do on its own. So number one, that's why the Federal Reserve is independent. But one of the main goals was to create a superior banknote to the private banknotes that were already in circulation at the time. You see, even though we were on a gold standard, banks, private banks all over the country issued note currency backed by gold. But the problem was, what if I had a note from a bank in Boston and I went out to California and I tried to spend it? How does somebody in California know it's real? He might not know what banks are in Boston. Maybe it's counterfeit. There was a lot of questions. It was hard, if you took the note far away from where it was issued, because, we didn't have these big banks that had branches all over the country, and you didn't even have a telephone. You couldn't validate. I mean, we guess they had the telegraph at that time, but it wasn't as easy to validate if a check was any good, or a note, not even a check, a bank note, right? An IOU from a bank. And, some of them had dubious quality. You didn't know how much gold actually backed it up, right? Who the hell knew? So the idea was to create a Federal Reserve note, a private bank, and the Federal Reserve note would rediscount the notes of other banks. So what would happen is if you had a note from a bank in Boston, instead of taking that note out to California, you would take that note to the Federal Reserve. You would give it to them, and they would substitute their own note. They'd give you a Federal Reserve note. They would take that note and give you a Federal Reserve note. Now, what the Federal Reserve was required to have backing its note was that note plus 40% gold. So the Federal Reserve had to back each one of its notes with the note of another bank plus have 40% gold backing it up. Now, you take that note, that Federal Reserve note, to California, and now the California bank recognize, not the bank, whoever you give it to, oh yeah, that's a Federal Reserve note. That's the Bank of the United States. That's our central bank. I recognize that. I'll take that note. And it was supposed to be of higher quality than other notes that didn't have 40% gold backing. Maybe they had 30% or 20%. But of course, the IOU was 100% redeemable in gold. You could always get gold. So if you had a note for $100, you could get 5 ounces of gold because gold was $20 an ounce. So we were always on the gold standard. All the Federal Reserve notes were redeemable in lawful money, gold. But in order to issue the Federal Reserve note, they had to be 100% back by another form of commercial paper, a note from another bank, and 40% gold. High quality notes. What is the Federal Reserve note backed by now? Nothing. It's got lower quality than any of the notes that were in circulation prior to 1913. So instead of a superior note, it's a lousy note.
Peter Schiff puts his argument in historical context. He notes the Federal Reserve, started in 1913, is America's third central bank. He says that history alone is a warning, since he believes this central bank has caused more long-term harm than the earlier ones. He is troubled by how the Fed has grown its influence over time. He contrasts this with earlier periods in U.S. history without a central bank, describing those decades as marked by strong growth, stable money, and rising prosperity. Schiff attributes this to monetary discipline tied to the gold standard, arguing that the nation's monetary foundation weakened once the Federal Reserve became permanent.
Look, though, once I'm Fed chair, if you ask me about the dollar, I'm not going to talk about it. I'm going to defer to the Secretary of the Treasury. I'm just going to talk about interest rates, which, again, is bullshit, because he's in charge of monetary policy, and the last I checked, the dollar is our money. I mean, think about how ridiculous it is that the guy who's in charge of our monetary policy can't talk about our money. And the idea, if he believes in price stability, what is price stability? It has to do with the purchasing power of our money that he says he can't talk about. So again, the idea that a Fed chairman can't talk about our money. By the way, our money is not really the dollar, it is the Federal Reserve note. If you take our money, take a $1 bill or a $100 bill, and look at it, what does it say? Federal Reserve note. That's what's written on the dollar. In fact, it's not actually a dollar, it's a Federal Reserve note. We write the word dollar on the note, but the bill itself doesn't say this dollar, it says this Federal Reserve note. That's what it is. So imagine you're the chairman of the Federal Reserve and somebody asks you a question about Federal Reserve notes and you say, I'm not allowed to talk about Federal Reserve notes. Well, they're your notes. They're your liabilities. How could you not talk about your own notes? Nobody other than me bothers to question the idiocy of that statement. The Federal Reserve, the chairman of the Federal Reserve can't talk about Federal Reserve notes. He can't talk about the value of Federal Reserve notes. He can't talk about the purchasing power of Federal Reserve notes. Somehow he's handcuffed, and the only one that can talk about it is the Secretary of the Treasury. Where the hell is that written? You think it says in the Federal Reserve Act that if you ask the chairman of the Federal Reserve about Federal Reserve notes, he can't talk about them? He has to keep his mouth shut and say, no, we can't discuss our notes. Nope. Go talk to the Secretary of the Treasury. Ask him about our notes. Don't ask me. It is complete ridiculous. But this is what happened because they don't want him to talk about it, because they want the Secretary of the Treasury, who can't do anything, right, to just say, we believe in a strong dollar. We have a strong dollar policy. Well, without the Fed, you have no strong dollar. It's just so ridiculous. But he did say that a strong dollar was good for the Fed. It's good for the country because it helps us achieve our mandate. Yeah, if the dollar is being destroyed, if the dollar is being debased, it makes it impossible for them to achieve their mandate. So Walsh was also asked if he agreed with Trump or disagreed about what's happening with Powell and the lawsuit over the costs of the Fed, the building. No comment. Doesn't want to comment. Says he's not a lawyer. Hey, I didn't take a course in law. I mean, come on. I mean, he said the same thing. He said, about Fed independence, about Lisa Cook. He was asked to comment about Lisa Cook. And, do you think does the president have the authority to fire her? And if he can, what will that do about Fed independence? Because he mentioned the fact that he thinks Fed independence is really, really important. And it's, one of the things he really believes in. So he's asked, well, if the president can just fire, an FOMC member, do you think that is a problem for Fed independence? And he goes, well, I really can't say, and it's like, well, what's your opinion? And he goes, well, whatever the Supreme Court decides, I might have taken one class on the Constitution, but, I didn't take enough classes to really understand it, right? Because, it's written in Chinese, so who the hell knows what the Constitution means? So, I can't even answer that question because I'm not a constitutional scholar. I'll just defer to whatever the Supreme Court says. I mean, what bullshit? But of course, I know he's probably instructed, look, the guy's going to get rubber stamped. He's going to get approved because the Republicans control the Senate. And the Republicans are scared shitless to do anything anti-Trump because, though Trump has lost a lot of his supporters, he hasn't lost them all. He still has a core group. In fact, I think he's retained more supporters than he's lost. He's lost a lot of independents. But the Republicans don't give his, crap about them. I mean, they need them in the general election. But what most Republicans don't want is a primary. They don't want some other Republican to say, you weren't MAGA enough. They don't want to, they don't want to be the next Thomas Massey. And we'll see. Maybe Massey is going to survive, and that will embolden some. I hope Massey survives. He's the best congressman. In fact, he's the only congressman I think. No, I donate. I think I donate. No, that was a guy that was running for Congress. He's the only incumbent that I've donated personally. Personally, I've donated to Massey's campaign. I maxed out. I might be able, if there's another cycle, but I gave the individual max to him. But I would encourage my audience to donate to a Massey. In fact, any Republican that Trump wants to get rid of is a Republican that you want to keep. Because the irony of the reason he wants to get rid of Massey is because Massey's against deficit spending. He's against all the stuff that Trump pretended he was also against, but now he's for. He wants to get rid of Massey because he's one of the only Republicans that has the guts to say, we don't have this money. We can't spend it. We need to cut government spending. Nobody else will say that. But, so because they're afraid. And so Warsh, to me, is he the worst chair pick that he could have made? No, I think there are worse people than Kevin Warsh who Trump could have nominated. That's the most I could say about it, right? At least the guy understands that economic growth doesn't cause inflation. And apparently, when Elizabeth Warren was grilling the guy about not predicting the 2008 financial crisis, which she didn't predict either, I, of course, did, he at least claimed that he was warning about Fannie and Freddie. Maybe he did warn about them, which would have been good. I was warning. I said they were going to go bankrupt. And so maybe he knew they were a problem. And so he probably is not even close to being the worst person that could have the job. He's probably not as bad as Yellen. He's probably not as bad as Bernanke. And maybe he's not as bad as Powell. But not as bad as really bad Fed chairman doesn't mean he's going to be a good Fed chairman. I wouldn't expect that at all. What I would expect from Kevin Walsh is more of the same. More of the same shit that we've been getting. More reckless money printing, quantitative easing, artificially low interest rates. That's it. That's what we're going to get. And that's bearish for the dollar. That's bullish for gold. That's bullish for the Euro-Pacific asset management strategy.
Peter Schiff argues the system has shifted from restraint to constant debasement. He sees the Fed as making it easy for the government to rely on cheap credit, low rates, and ongoing intervention. Every round of easing, he says, delays problems but weakens the currency. That is where the prediction in his message becomes important. Schiff makes it clear that if the response continues to be more money printing, more quantitative easing, and more suppression of market discipline, then the dollar faces deeper long-term weakness while gold benefits from renewed demand as a store of value. The stronger his criticism of fiat policy becomes, the more constructive his outlook on gold becomes. His warning goes beyond one policy error. He says the entire monetary model has lost its anchor. Share your thoughts on Peter Schiff's analysis in the comment section below. If you found this video informative, Please like, subscribe, and turn on notifications so you never miss our latest updates. Thanks for watching.